Hi, and welcome to another episode of the How to Be a Money Master show. I am Jennifer Harder, your financial educator. And tonight we're going to be talking about an article that I saw this week. And that was that over 7 million auto loans are more than 90 days in arrears, which is not only a red flag for the economy, but it also speaks to how little information people have or little knowledge people have as to what an auto loan or almost any type of loan entails. And so I wanted to take this opportunity to discuss this with all of you. And quite frankly, when I saw this headline, I was both shocked and dismayed because that is 1 in 30 U.S. adults. And when you consider not everyone has an auto loan, it's actually probably much higher. I shouldn't say much higher, but somewhat higher. But just, if you take the number of U.S. adults and divide it by the number who are in arrears on their loans, or the number of loans that are in arrears, I guess I should say, because people could have more than one loan. Really, that means that there's chances are someone is in arrears on their auto loan or loans. So, think about it. If these people are having a difficult time paying for their auto loans while the economy is doing well, interest rates are low, unemployment rates are low, et cetera, what's going to happen if, like is going on right now, the economy starts to take a downturn? How are they going to be able to pay these auto loans? And people tend to pay their auto loans more so than other ones because, you need your car for so many things. Unless you live in a city with public transportation or everything within walking distance, if you're out in the country or even to some extent in the suburbs, you need to have a car to get you from, your house to the grocery store, to work, to sports activities, to school, et cetera, et cetera. So, auto loans tend to rank fairly high on people's must-pay list. So one thing this article went into was it talked about the majority of delinquent payers are under 30 and have low credit. So this means they're already starting at a little bit of a disadvantage because, as we know from earlier discussions, people who have low credit scores automatically pay more for loans. And people who are young tend not to have, established careers. They haven't established their credit. So they are already getting hit the hardest by a lot of these lending practices that have higher interest rates and lower credit limits. To some extent, that's, I guess, a good thing because it detracts them or deters them from, borrowing more than they really can afford. But by the same token, they pay so much in interest that it's, like I said, it puts them at a disadvantage because they're paying more to borrow the money than the people who do not need it so much. And that's really the big thing with lending is, banks love to, or lenders in general, love to lend to people who don't need the money. So when you really, really need the money, that's when you're going to pay the most. And so, that may be why. So it's difficult to say which is why. If it's, if they're having difficulties paying their auto loans because they're young and maybe don't have the best credit, or if, they're behind because, their loan is taking up a bigger chunk of their budget than might otherwise be the case. The article also noted that there was a higher default rate among those who use auto dealer financing. Now, this could be because it's in the dealer's best interest to get you financing whether you need it or, whether you can really afford it or not. They mostly care about making that sale because once the loan is in place, they don't have to worry about it anymore. They don't have to deal with the fallout. Whereas if you're borrowing from a bank, the bank wants to recoup their money. And so, a lot of times auto dealers will, they'll shop around. They know which lenders are most likely to help you out. And unfortunately, there are some unscrupulous lender or some unscrupulous auto dealers that will, play around with your income. They'll play around with your trade-in. They'll play around with whatever different metrics they can to make it look like you are can afford more than you have. You're making more than you are. Whatever. They know how to game the system. And not all of them do that, but there are some. In fact, I've even heard of some going so far as to telling you that they'll pay off your old car when they don't. There's other ones that will tell you to buy the new car and then default on the old loan. And they basically say, let the bank take it back, which sounds innocent enough. It's like, let the bank take it back. You have your new car with your new loan. You don't have to worry about paying off the old car or rolling it into your new payment. However, what they don't tell you is that when you do something like that, the bank will, yes, they will repo your old car. It will hurt your credit score because now you're delinquent and you've defaulted on a loan. So that really hits your credit score hard. And on top of that, if they sell that car for less than what you owe, you still owe the difference. And the auto dealer is not going to tell you that. So if you have an auto dealer who is trying to, play with the numbers and do some creative accounting on your behalf, run because they are unscrupulous and do not have your best interest at heart. It really is. Many times your best bet is to get a loan through a bank or a credit union. Occasionally, though, dealerships will have, or dealers, car companies will have some really, really great rates when you do the financing through them. But that's going to tend to be through whatever the manufacturer is, their specific lending, not through some third-party funding source. So if you are buying a Ford, if you go through Ford credit or Chevy credit or et cetera, Toyota credit, whatever, they're more likely to make sure that you can afford your loan and do things by the books, as opposed to, when you are buying through the dealer and, they're using some third-party lender that you've never heard of, possibly even a bank to some extent. Some of those banks you have to watch out for, but, you just be aware, I guess, is the main thing to take away from that. And, unfortunately, for people who do find themselves in this situation, unlike the student loan forgiveness program, unlike, universal health care or any kind of medical relief, no one is talking about a massive auto loan forgiveness program. So if you find yourself in this situation, there's really not a whole lot that you can do. Your best bet, as always, is to talk to your lender. So if you have difficulty making your auto loan payment, or any loan payment for that matter, first off, start by talking to the funding source, whether it's your credit card, your auto loan, your student loan, a mortgage. Talk to whoever you borrowed the money from and see if you can work something out, because that is always the best case scenario. And many times, especially with the economy being what it is, and especially after the downturn back in 2008, a lot of these places have put practices into place and policies into place to help you. So this is not something they haven't seen before. There's a lot of precedents involved with this. And so, talk to them, see what they can do for you. And the other thing you do too is perhaps talk to other lenders, and depending on your situation, you may be able to get more favorable terms, especially depending on when you took out your loan. Interest rates are super, super low right now. And so there's a chance that by refinancing your loan, you may be able to save some interest that way. And especially, if it's been years and now you built up some more credit, you have some more history, et cetera, you may find yourself able to borrow at lower rates. So it's definitely worth checking out. Maybe not for everyone, but, consider your specific situation. So what are the key takeaways from all of this? One, just like any other loan, determine your budget and the maximum that you can comfortably afford to spend each month, including, do not forget, you're going to have maintenance, insurance, taxes if applicable, and any other related costs. Two, do not be swept off your feet by some sweet-talking seller who plays on your emotions. You really can survive without those specialty floor mats or that 6th cup holder or whatever little thing they're trying to upgrade you on, because it just sounds so great. And a lot of times they do this after, you've kind of gone through and seen what you need. And they'll be like, oh, you have kids. Well, they would love this in-car entertainment center, or, the heated seats or the heated steering wheel, or, there's so many things that you really don't need. Most basic cars nowadays, especially when you look at cars from 20, 30 years ago, these cars come standard with things that used to be luxury add-ons. And so, chances are, anything that comes standard with the car, the things that you actually, even then you have a lot of things you don't really need. Like, trust me, you don't really need, and anyone over probably 40 could tell you, you don't really need automatic windows and automatic door locks. I mean, they're nice, they're convenient, they're pretty much standard now. But most of us remember a time when we had to roll the window down by ourselves and somehow we survived. So, really, when you go and have a clear idea of what you want, what you can afford, and don't be afraid to talk to the dealer and say, hey, look, this is what I have. This is my budget. This is how much I want to spend each month, whatever the case might be, and be ready to walk away if they don't meet your demands, because they're always looking to make a sale. And a lot of times just being able to walk away and go down the road or having options, makes them the desperate ones. They'll chase you as opposed to you chasing them. Because remember, just like in anything else in life, any kind of relationship, if you're the one doing the chasing, if you're the desperate one, other people don't find you that attractive. And when you are the one who's willing to walk away and say, yeah, whatever, I'm worth so much more than that, the other person has to come chasing you. So keep that in mind. And then 3, if you do find yourself with more month at the end of the money, take a good hard look at what expenses you can cut, what assets you can sell, what liabilities can be negotiated, and what options you have to earn additional money, because there's always something that can be done. There are always more expenses that can be cut. Some of the easy ones that come to mind are, your cell phone plan, streaming services, cable, your coffee habit, eating out. There are so many things, buying the generic instead of the name brand. There are just so many options. Even me, with as tight as my budget is, if I needed to, I know I could cut some more out. It's just the way things are. You kind of get comfortable with where you're at and you don't want to give up anything, but at least for the temporary, if you need to. And of course, the flip side of that is earn more. Figure out a way to, start a business selling things, or affiliate program, or multi-level marketing, or, there's so many different things that you can do to earn a couple extra dollars, a second job, whatever the case may be, that could, help you up the revenue side, or, decrease the expense side. And last but not least, remember that lenders favor borrowers who do not really need to borrow. So become one of those people. Before you spend on credit, figure out what you can do to spend less by using cash, and save for your big purchases. It is recommended that you save 10% of your after-tax income to be able to use as short-term savings, which is definitely something that you could use to make that down payment on the car, or whatever the case might be. But remember also to keep your allocations balanced. So if you're putting 10% into your short-term emergency savings, you also want to try and put 10% into your long-term investments or your retirement savings, 10% into your play money, 10% into, I'm going to go completely blank right here. At least 5 to 10% into your tithing or giving, and 10% into your education, which ends up being about 45 to 50% of your income that you want going into those various buckets, so that you have a balanced lifestyle. The last thing you want to do is have everything so focused and so, one-sided that other things suffer. So, make sure, and if you can't do 10%, if you really cannot do 10% to your savings in each of those amounts that are recommended, then, make it equal. So even if you have a total of 10%, you can put, 2% each in each of those buckets, 2% to savings, to short-term savings, 2% to long-term savings, 2% to education, 2% to play, and 2% to giving. The important thing is that you want to make sure that even though you are, focused on what you're trying to accomplish, you want to have some time for fun and some room for fun, and you have to be giving to others. It's just a psychological thing, and it's been proven that if you can manage what you have, you'll be given more. If you cannot manage what you have, then you will not be given more. And last but not least, become financially empowered. So learn about money, finances, investing, ask questions, join a community dedicated to this purpose, meet up with friends, whatever the case might be. But make sure that you're learning about these things so that you are ready when these questions come up. Definitely educate yourself, whether it's free or you pay. It doesn't matter, but get that education. Read a book, join a group, whatever the case might be. So when we always have the How to Be a Money Master free Facebook community that you're more than welcome to join. There's 3 easy questions. You answer those, you're in. And in there, it's a whole community of people that are doing the same thing you are doing. We're all becoming financially empowered and sharing ideas and sharing wins and learning experiences. So we'd love to see you over there. So on that note, everyone have a wonderful day, and I will talk to you soon.